Fight against inflation or herald of a painful period ahead for the U.S. economy? This is exactly how economic experts and the public experienced the last decision of the U.S. Federal Reserve to raise benchmark interest rates by 0.75% for the third consecutive time. These hikes are matching increases implemented in June and July, showing Fed's commitment to wage its most aggressive fight against inflation since the 1980s. The uptick is the third consecutive 0.75 percentage point move and the fifth increase in the last 6 months, all part of an effort by the central bank to cool runaway inflation.
The economy and the country have been through a lot over the past 2.5 years and have proved resilient. It is essential that we bring inflation down to our 2% goal if we are to have a sustained period of strong labor market conditions that benefit all.
They also indicated more hikes would be coming. The Fed's benchmark interest rate now sits between 3% and 3.25%, compared to the current range between 2.25% and 2.5%, and up from near zero in March. Officials expect it to cross 4% by the end of the year, well into what's considered restrictive. As previous experiences have shown, after a big rate increase, markets are again in fear of a recession, as they have been known to choke on the prospect of higher rates. This is the highest the Fed funds rate has been since the global financial crisis in 2008 that came after the Fed was slow to react to rising inflation last year. That will certainly cause economic pain for millions of American businesses and households, as it impacts the cost of a broad range of borrowing, including credit cards, mortgages, and business loans. Therefore, it is quite clear why the question of the recession that we had 15 years ago is being raised again.
We don't see a recession imminent right now, but I can't say it won't happen in the future. And I think it's likely that the Fed will not say they want a recession. They don't say that, and they never say that. But they know the only way to really get inflation out of the system is to jack up interest rates, and that inevitably will produce probably a hard landing. They won't say that, but probably something between a hard landing and a modestly hard landing is what they would like.
The Fed's latest interest rate hike comes as inflation continues to surprise to the upside, and the Fed continues to see inflation elevated this year. New projections show inflation rising 5.4% overall this year and up 4.5% when excluding volatile food and energy prices. Officials expect inflation to drop to 2.8% or 3.1% on a core basis in 2023. They projected 2.3% in 2024, followed by 2% in 2025. So far, the job market and consumer spending have stayed resilient through the Fed's sharp rate hikes. Officials expect the unemployment rate, currently 3.7%, will end the year at 3.8% before rising to 4.4% by the end of 2023.
Pressure in the labor market, where everyone keeps looking for employees, and the resulting higher wages continue to add to inflation. And it seems like the Federal Reserve doesn't see the inflation pressure slowing until the job market cools off slightly. And they've even said yesterday that, they expected to see a rise in unemployment as a result of their actions. And even when they talk about small percentage differences, that's over 1 million more people unemployed, which, is going to have a big impact on the country and, of course, those households.
Russia's invasion of Ukraine caused a global energy crisis that pushed inflation even higher. Ongoing supply chain issues, plus an out-of-whack job market, have made it more difficult for the Fed to solve inflation with rate hikes alone. There are only so many ways to increase supply in the short run, and supply chain improvements or an end to the destabilizing Ukraine war are not guaranteed. Therefore, the Fed must restrain demand by making it more expensive for companies and individuals to borrow and invest, meaning that the job market, wages and economic growth must suffer to avoid even worse economic conditions.